Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, March 8th, 2014. That would be Ocho Marcho for those keeping score at home. Anyway, what we had today was a very bifurcated market. We had some pretty good strength on the ES side. We're up 10 handles on the S&P side, but the Nasdaq side is still pretty weak. We lost 11 handles on the Nasdaq futures, and put up 108 on the Dow. So the rotation that we have seen is still definitely happening. And the other thing to keep in mind here is that you can also see it in the market internals. We're plus 900 issues on the New York Stock Exchange, but we're minus 350 on Nasdaq. Here's a look at the ES futures, and guess what came into play again today? 1875. 1875 has really been dominating trade here for months. We got a little bit above it, came back up, came back down, and then the last few weeks it's really been prevalent. So 1875 is still really key. It's almost like a perpetual strike right now that the market's just glued to. But once we resolve this, we should get a pretty good move. That's the good news. But the bad news is we have to be patient and wait for that to happen and not force things. We're able to still hold above this 7/8 level, but more importantly above the 50 DMA after this pivot right here. So we're still above the 50 DMA, which is definitely important. But you can only spend so much time here in the box before we make the move. When we do make the move, it's going to be more than welcome, and we should be able to get out of this range. To the upside, the high water mark on the move at about call it 1885, and then above that 1890 is going to be the level to watch. To the downside, the 50 DMA has been in play. We opened at it, rallied back up, used it the last couple of days, so that's really going to be important. So keep an eye on the 50 DMA, which is roughly the 7/8 level at 1859. Moving on to the Nasdaq side of the market. Obviously, it's a much weaker looking chart. Everything's been weaker. We're back down below the 10 EMA. The one bright point for Nasdaq is we did leave this big tail down below here. So these drops have been absorbed by the buyers, and the sellers haven't really had enough to really roll it to the downside. The negative here is that we're below the 50 DMA on the Nasdaq side, whereas we were just talking about on the broad market side with the ES, we're above the 50 DMA. So this is a totally different tape in this market. So to the upside, this 4/8 level at 35.93 is going to be important. To the downside, this 2/8 level is really the one to watch. TLT did break a little bit lower today, but used this 8/8 level at 112.50. So we broke out of the 3-day range, but really didn't get too much to show for it. And that's good news, though, because that means that there's still energy stored up in this little pattern. And when we do resolve this range for real, it's going to have some punch to it. Oil futures on the day were pretty darn positive, which was kind of a risk-on thing, and I think that really was reflective of what we saw in the broad market with the bidding activity that we saw there. So definitely a positive here. If we get above the 50 DMA, this SAC trend line is definitely going to come into play. To the downside, this 4/8 level support, and then the low water mark from the 9-bar drop will be important as well. Gold futures had a pretty big drop intraday. We opened up fairly tightly, and then really had a pretty good plunge, but we're still just range bound here. Working on 10 bars down as of tomorrow. This is tomorrow's Globex trading. So working on 10 bars down, and if we get to 13, it's not going to be probably going to be extended to the downside, but it would mark the end of an impulse. Haven't looked at the cumulative advanced declines in a while. On the New York side of the market, that's the top chart here. Still pretty positive, obviously, working from the lower left to upper right on the chart, so that's real positive. Don't have a lower high confirmed here or anything like that, like we've seen in the Nasdaq, so this is still positive. Nasdaq, meanwhile, continues to roll over here. We're making lower lows, and today we marked a new low on the move with the negative internals that we did have. So this is a divergence that usually gets taken care of by the New York side, ultimately succumbing and taking the direction of the Nasdaq. but we're not seeing any evidence of that just yet. Here's a look at the NDX versus the S&P. This is the relative ratio chart. You see that as of today, we made a new low on the move, undercutting this previous low. So that's a real negative. If we get down to this bottom channel here, expect to find some support. But for now, the NDX still has very, very poor relative strength versus the broad market, which is always a negative. Here's a look at the multi-sector daily chart. The XAU was definitely really weak. We saw the weakness in the gold, and that definitely followed through to the gold miners. We didn't make a new low on the move, but we're actually pretty close to it. So keep an eye on this tomorrow. If we see weakness in gold again tomorrow, we could lose this area, and that could be a tradable opportunity. BKX was fairly positive today, which is pretty strong. The oil services was nice and finally started to kind of return to a little bit of an upward trend. The transports, though, which is the purple line here, is still below this previous high and just kind of winding up in here. So definitely keep an eye on the transportation names, all the rails, the shippers, even the airlines. This could definitely be something where we could see some more upside here if they can kind of muster that and get it going to the upside, which would definitely be welcome for the markets. All right, let's end with the multi-sector watch list. Here's the utilities top gun on the day. Fairly defensive industry, so you would hope to see a little bit better bidding out of some of the other sectors. The BKX was fairly positive, putting up 1.2% on the day on a relative basis, which is pretty good. The broker dealers were also close behind. It gapped up. They filled the gap, and they actually came back for them. So that definitely is interesting because that gap fill got absorbed very, very quickly in these names. Oil services was also fairly strong, as we talked about. Transports were definitely outperforming a lot of the high beta stuff in the NASDAQ patch. So pretty good relative performance here from the late cycle stuff, which is definitely a positive. Like we talked about before, the XAU was very weak. The BTK is still a source of funds for now, and the semiconductors was also kind of a laggard to the broad market, but it actually outperformed the NASDAQ. So, the takeaway from today is that the late cycle stuff really did do what it's supposed to do and kind of absorb a lot of selling, and was a place for money to be rotated into, and that's definitely what we're seeing here. So if the market can keep that up, the S&P is okay. If the rotation stops and we get to outright net selling, then we're going to know what to do. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.